A wonderful good morning. It is Tuesday, the 3rd of August, and Tuesday at 10 a.m. CT means it's time for yet another episode of That Crypto Show, your live trading related educational content brought to you by Prime XPT, the Prime XPT Trading Academy. My name is Dirk Hartig, and I have not only the pleasure of being your host today, I'm also the head of education here at primexpt.com. If you are not already doing so, please remember to also follow us on Twitter at px_academy. We have daily new content and we shed light on what is really going on with cryptocurrencies at the moment and what moves to expect. If you want to get in touch with us, you can do so under academy@primexpd.com. Just drop us an email. We will answer every single email, every question that is asked there, so don't be shy. And sometimes we also like to cover those questions here live on our show. If we think that is a question that is relevant to not only you, but maybe a lot of traders out there. So we've put together a great show for you today. But before we start, as always, a little risk disclaimer. This webinar is brought to you and provided by the primexpd.com research teams. We are all professionals here, but our intent of this is not to give you financial advice. It is to offer you live trading education, the opportunity to look into the minds of professional investors, of professional traders. Nonetheless, by the end of the day, you have to make your own choices. You have to do your own due diligence. So please don't just simply copy trade something. The ultimate goal always is that you reach a level where you can make your own well-informed trading decisions. All right, let's jump right into this. We are going to have a look in depth at the chart and what happened since last week, Thursday. Later on. As always, I want to start my day with looking at some news and looking at the fear and greed index for Bitcoin to kind of get a feeling on which side I should position myself today on when, for example, executing day trades. So the fear and greed index at the moment neutral at 48. So that's really almost exactly in the middle of between 0 and 100. So 0 would be extreme fear, 100 extreme greed. If you're in those areas of extreme greed and fear, you can expect always that the volatility to that side will be higher. So meaning if we are, for example, in an area of extreme greed, you can expect to see more green candles here, higher green candles, more volatility to the upside, more momentum in those swings. On the contrary, if we are in an area of extreme fear, which we were here, by the way, usually the downside momentum is there more. But if you reach an area of extremes, meaning extreme fear or extreme greed, it also means that there is potential for a very quick change to the other side. Why is that important? For me, this is a very simple and easy tool where you can, with one glimpse of an eye every morning, make for yourself or for myself in this case the decision whether I'm going to favor short trades or whether I'm going to favor long trades, or in this case, where the market seems to be undecided on the future of Bitcoin at the moment, I can also take the opportunity to actually trade both sides. So a neutral setting means really like, okay, the market doesn't want to go higher at the moment, or in this case, the market participants, to be more precise, they don't know if they're expecting higher Bitcoin prices or lower Bitcoin prices. So for day trading activity, it should mean that the daily swings should be pretty balanced. You can expect as much volatility to the upside as to the downside. So this for me is always important to plan ahead my day of trading. By the way, you also can access this Fear and Greed Index for Ethereum as well. Ethereum has shown the tendency to unlock itself a little bit from Bitcoin. So the two of them are not moving in the same direction or with the same pace, with the same beta anymore. So it used to be a couple of years ago that if Bitcoin rose by 5%, you could have been pretty sure that Ethereum also rises by 5%. This is not the case anymore. And we saw an example of this yesterday where we saw lower prices in Bitcoin, but Ethereum still being strong. And we will cover this on upcoming show, by the way, where we will have a more in-depth look at Ethereum as well. Second thing I always like to do, I like to look at some news to get a feeling for, are the news agencies out there bearish or are they bullish for Bitcoin, or are we seeing somewhat neutral things at the moment? So what we see here is one thing that popped into my eye is from a new service called CoinGate. Bitcoin tanks under 40,000 once again. Here's what investors can do. As of course, like again, a little bit like clickbait, tanks under 40. It sounds like we tanked all the way down to 30 or 25 or whatever. So, but it's true. We went all the way to 42,000 over the course of the last weekend, and now we are at around about 38,500. So that's like round about over 10% of, no, around about 10% that we fell again. So altcoin cycle, saying like, if we reclaim range high at 41K, long and close at 49, yeah, okay, this is a bit of cheap analysis. I mean, everybody can do this. More interesting for me is always something like this, the on-chain metrics. On-chain metrics being like what is going on in terms of profit taking on the blockchain itself. So, for example, you can try to analyze, and there are some services out there that are pretty good in doing so, what if investors that recently bought into Bitcoin or a time period X ago, if they are selling with a loss, holding onto their coins, or even accumulating more. And this is really interesting for me. Is this comment here on Twitter by Joseph Young, which is covered also in this article, saying, okay, we are now in terms of on-chain metrics, and in terms of open interest, at where we were last in February 2021, and we all know what happened from that point onwards. So from there, we rose all the way to our high, just to drop then again. And this seems like we are at this stage now again. So you could interpret this as the market had a healthy consolidation phase and is now poised to go higher. And this pretty much, I must say, in the long term, covers also my own opinion about what is yet to come this year for Bitcoin. Then we have also very interested payment firm Square. So payment Square, a little bit like PayPal, revealing customers bought 2.72 billion US dollars worth of Bitcoin over them. And I mean, that is really quite something, no? And but if you compare this to their revenue, they generated revenue in just the second quarter of 2021 of 4.68 billion US dollars. Wow. They are really sitting on some money there. But why is that important? Because it shows that retail investors, and whenever I say retail investors, I mean everyday investors like you, like me, like my dad, like my mom, investors that want to buy here 100 euro or dollar, that are like maybe investing a certain percentage of their portfolio, that are not institutional investors sitting on billions of US dollars of funds that they have to manage, but really everyday normal people like you, like your neighbor, like me, that want to invest in Bitcoin, that want to invest in cryptocurrencies, to become part of this movement, really, I think we can see. And for these people, it's always very important to have easy solutions to do so. So somebody like my dad, for example, who's in his 80s, he cannot be expected to open. First of all, he's not good in using the internet, so that's something to start with. Second of all, I don't think he would be able to open a wallet or a bit or an exchange account at a cryptocurrency exchange. So those people always need like easy solutions, and Square, also PayPal, some other companies out there, they offer those solutions. And why is that important for me as a trader? I mean, you could say, okay, Dirk, this is interesting, but what does that have to do with our daily trading activity? To me, it shows that that cryptocurrencies, that Bitcoin, Ethereum, cryptocurrencies in general, are arriving at the masses of people. And I think there's a metric out there I saw the other day that the amount of users for Bitcoin at the moment is at the same level as the internet in 1997. I remember 1997 very well, and I also remember when using the internet, you would dial in with those modems with 33 or 54K of transaction bytes. I don't know what the metric is there of transaction or of speediness, and so it was very slow. So you could assume that the best is still to come, in my opinion, from something like this. So sometimes it's important not to focus just on the day. It's important to zoom out, look a little bit back, and soak in the whole picture. Another very thing that has been discussed quite a lot recently is China's digital renminbi. And there's an article here trying to highlight what the difference is. And I think this is important, not so much for trading, but let's take this moment just now and not maybe talk about trading. We'll do that later. These central bank issued cryptocurrencies are or digital currencies are something that we are seeing more and more, not only being discussed, for example, by the ECB in the European Union or by the Fed in America, the Federal Reserve Bank. And so they are thinking of issuing their own digital currencies. China, like always, actually, you can say for things like this, is already a step further. So they are almost done, not only creating the digital renminbi or yuan, they have test driven that already. So they have airdropped some to the population. The population used this with electronic wallets to, for example, go to Walmart and pay there. But it's important, and it's very often discussed here, is that really competition for something like Bitcoin, for something like Ethereum, so for your typical decentralized cryptocurrency? And in my opinion, it's not. Because the main difference is you have here the central authority, the Chinese central bank, or be it the ECB in the Eurozone or the Federal Reserve controlling. So it's really nothing new. Yeah, it's still it's like a stable coin. It's going to be pegged one-to-one to the native currency. So one digital renminbi is always going to have the same worth like a non-digital, a cash renminbi or yuan. Same goes for the euro. Same goes for the US dollar. So it really fails, in my opinion, to address what Bitcoin, what most cryptocurrencies really are about, and that is taking the middleman away. I mean, this is why Bitcoin, why Satoshi back then, was one of the reasons why Satoshi back then invented Bitcoin, because he wanted to take away the central authority, to allow normal everyday people to be in charge of their money. Yeah, so nobody using Bitcoin can, for example, stop me from sending you over a wallet money. No central authority could do that. Yeah, they could cut down the internet, imply all kinds of tax rules and so on and so forth. So, but for the sake of it, it's very hard, if not impossible, for central authorities to stop this. And central banks have a history of disappointing. If you, for example, witnessed the aftermath of the 2008 financial crisis and you were living in Greece and you had more than 100,000 euro on a bank account, that basically was taken away from you. So nobody's going to keep a central authority, be it a government, be it a central bank, from taking away. And this is really the big difference. I don't want to go too much into philosophy here. And I think probably everybody that has been reading into Bitcoin, that is trading Bitcoin or is holding Bitcoin, sooner or later becomes somewhat of a Bitcoin maximalist. But keep that in mind. It's a nice technical gimmick. It makes probably using and issuing money, fiat money, easier. The usage, it's basically like cash, but you have it on your mobile phone, man. No doubt about this. So it's a technological advancement, but it's not decentralized. So nobody could keep the central bank from saying, okay, we're going to shut that whole thing down. We're going to take away your money, or we're going to devalue your money. So we are comparing apples and eggs, really, if we talk about central bank issued digital currencies and compare them to decentralized ledger, like, for example, Bitcoin. All right, so a lot of talk, and one final thing before I promise I'll go into the chart a bit more. So another thing that I think is super important and was kind of overlooked, if you are not only trading cryptocurrency, if you are, for example, also trading euro dollar or any currency pairs, or any commodities maybe that are in US dollars, you should know about this. So the world biggest pension fund, which is the Japanese government pension fund, cuts is UST holding. So that are US dollar treasury bonds that are issued by the US government, for example, to finance operations. So normal process every country does, and usually you would hold a lot. Those pension funds hold a lot of US dollar treasuries because they are very safe, because they are backed by the USA, the economic power of the USA. Same goes for other so-called first world countries. And this is quite an announcement that they are cutting 35% of that down. Because remember, you have yields, so the interest rate you are earning on average for a US dollar treasury of 10-year maturity is at around 1.25% at the moment. It's positive. It's not a lot per year, yeah, but it's positive. In the EU zone, for example, they have France here, as they are mentioning, you have negative yields, and still they are shifting. So they might be expecting, whoever runs this pension fund might be expecting a devaluation of the US dollar. And if they are right, we should see this for example, in the currency rate of euro to US dollar. You should see that in gold. You should see that in oil. So this kind of underlies the fear of inflation or hyperinflation being on the horizon for the USA. So it's going to be interesting to see how that plays out. It's going to be interesting also to see if they are the only ones doing so, or if we are going to see more like this. Could be a trend reversal for the US dollar, which would mean euro US dollar going up maybe to 130, 140, 150, or maybe even higher. Let's see how that plays out. Good. So finally now, let's have a look at the chart. What's going on in Bitcoin? And maybe you saw that on our Academy tweet the other day. We had down here a nice outside bar. So if you are into candlesticks, You might have noticed this on the daily time frame. Outside bar meaning you have a red candle, a green candle, and the green candle not only fully engulfs the red candle but closes higher than than the high of a red candle. So this is called an outside bar, and according to the candlestick trading methodology. Sometimes English is a difficult language, at least for me as a German native speaker. So meaning this is an indication of higher prices to come. And I think, and this is why I wanted to point this out, in this case, it worked out very well. Are you guys also trading candlesticks? What is your experience with that? Drop me a note, leave a comment if you're watching on YouTube. Would be interesting to hear your experience with this. So last Thursday, when we were around this area, I said something like I'm expecting prices for now maybe to consolidate a little bit in the lower area, and I was a bit wrong on this one. So we actually went all the way to 42K before this phase of consolidation, which now with a fourth day with a red candle, if we close in that area today is going. So the question now is, are we still on track to maybe see another all-time high? And I think we are. But in order to really do so, we need to regain this area. This is the utmost importance in my opinion, that we sooner or later, hopefully within the next couple of days, see a candle closing above the 200 days moving average, because this metric is very, very important for a lot of longer term institutional investors, for a lot of longer term professional traders. Longer term meaning that they don't engage that much in day trading. They usually buy coins and then they hold on for weeks, months, or maybe even years. And historically for Bitcoin, you could always see that if the price crosses the 200-day moving average to the upside and closes, that this indicates a phase where we see rising prices, so a bull market. On the contrary, if we close below, and you could see with those wild swings we did here, crossed again, this usually indicates a phase where we see lower prices. And we did so. So as long as we don't close above the 200-day moving average, we are still in a bear market, we have to say, at least a short-term bear market. If you are a long-term Bitcoin holder, it doesn't really matter to you. You're probably happy to see the prices right now because it means you can buy more coins at cheaper prices. And if you are a trader, what you could do again, and I'm repeating myself, is you could try to short here at 40, 41, and 42,000. This one is a new resistance level now that wasn't there last week. So kind of surprised me really that we went with a lot of momentum up there and then went down again with a lot of momentum. So at the moment, really, I'm expecting this to play out somewhere in the area between 36 and 40,000. So what we usually see after a period where the Bollinger Bands, do this scissor movement, is that prices will come back, consolidate until you have the next momentum move out. And optimal and healthy would be, in my opinion, for a couple of days if we consolidate somewhere here between 36 and 40,000 and then have the next move up that brings us over those around about 45,000 where we recapture the moving average. That's the optimum. And this is my long-term game plan at the moment. So I have, as a trader, obviously a portfolio where I do long-term trading. I have a hodling portfolio, obviously. I have a long-term portfolio where I do longer-term trades, and I have a portfolio where I do day trading. And my game plan for this longer-term portfolio really would be accumulate now a little bit again and hope that we see the Bollinger Bands coming back, getting a bit narrow to have a new momentum that brings us up over 45,000. As long as we don't recapture this area of 45,000 or wherever the 200-day moving average will be in a couple of days and weeks, we are still not back in a bull market. And I think you have to keep this in the back of your mind, because if you read daily on Twitter, if you read in the media, maybe you read on Reddit every day, it's for me always very symptomatic for Bitcoin trading, for cryptocurrencies trading. That's once you see those moves, like those, what did we have here? 1, 2, 3, 4, 5, 6, 7, 8 sorry, 8 candles in a row, 8 green candles, that everybody becomes euphoric again. Same on the downside. If prices move down, everybody becomes very fast, very pessimistic again. And when in doubt, zoom out. So you have to view the long-term picture, and those areas here seem to be at the moment a level of resistance that is very hard to overcome. But bear in mind, if you trade Bitcoin on the short side, Bitcoin is always good for a surprise. And remember those moves we had down here, where all of a sudden, out of nothing, we saw green candles, which usually indicates that somebody with deep pockets is buying there. And we are talking here still about a quite young market. So the market capitalization and the daily trading volume, for example, in comparison to the overall currency market, is still very, very low. So large orders, I'm talking about somebody buying like 10, 50, 100 million. Those are still volumes that can move the cryptocurrency prices significantly. And you don't want to be on the wrong side then. So every technical analysis you can do can be wiped out by somebody with deep pockets deciding, oh, I'm going to buy 10,000 coins, or I'm going to sell 10,000 coins. So you want to be careful there, especially when trading short, because those upticks we usually see are higher in Bitcoin than the downticks. Okay, so at the moment, in summary, difficult to answer. What is going to happen next? In my opinion, to summarize things again, we really need to recapture those 45,000 up there. We need to close above the 200 days average in order to signal to the more long-term investors out there that the bull market is back. Until that doesn't happen, you probably can actually trade both sides. So be sure, if you decide to be short, that your latest stop loss should be somewhere around this area. Because if we close above there, things can move very, very fast, very, very quickly. And as we all know, this is one thing Bitcoin is really good at, moving very quickly. All right. Until that's all for today. Tomorrow we are going to have a nice special. We want to talk about how to come up with evaluation models, what Bitcoin or cryptocurrencies, what the real value of cryptocurrencies, especially in this case Bitcoin, is. So tomorrow we are going to talk about the stock to flow model. I'm looking forward to seeing you again there. And until then, stay safe and remember to always set a stop loss and take profit. Take care.